really rally with the overall market, and I don't think it's a delayed reaction. If anything, it might get some movement up to like 47.5. That's $1.50 from here. And if the volume levels do not make newer highs on that volume, on that rally, if it does rally, that is. So watch Xilinx, you know, put it on a watch list, because if this thing definitely, I mean, you got this huge gaping hole up in here around 50, and I want you guys to realize an old floor trader's rule of law is gaps don't necessarily get filled 100%. 50% does the trick. And so just to come in and test that area, you know, is still 51. So from 46 to 51 might be a fairly decent short-term trade, but you need volume. Otherwise, I would be looking to see this stock is overall, in my opinion, a complete dog. D-O-G. It's it does not conform with moving in tandem with the overall market. It's completely, as this longer-term trend chart shows here. Let's go into the weeklies here. Even the weekly volume doesn't, and in the weekly charts, it doesn't even show any type of resolution to the downside. In other words, we have not made any higher highs. We haven't made, you know, except for last week, a higher low. So the overall weekly resistance is up here like 48, and then this breakdown, which on a weekly chart you'd see that gap up there. You know, even the midpoint of this breakdown is around the $50 handle. So Xilinx is not one that I would chase whatsoever, and I think what will happen is in the next couple days, people are going to be chasing performance, and they're going to be short. They're short the market in two senses. A, they're literally short the market, and they're screaming to get out of the short position, and then they're short bought, meaning they don't have any positions on because they were cutting back. A lot of fund managers were cutting back because everyone was betting that the stock market was going to crash and go down, and everyone was looking for the big kahuna. Right? So short bought means as this thing starts to move higher, and I'll be honest with you, as good as our analysis was, my trading could have been better, and you guys are witnesses to that. I decided to cut my trades off, take a profit as the market rode into strength rather than, you know, holding a little bit more. I mean, I held on a couple little things like a Starbucks, something like that. In any event, when you guys see there's four people here. John Person, Mary Person. I'm actually Mary Person today. So if you PM me, you're PMing me in my headset. So if you could just kind of refrain from the PMs. I'm using two different computers here, so that's all good. In any event, I wanted to go through our. We've got a lot to discuss today, but what I wanted to go over is number one. What did Friday's price action do? And Friday being a holiday, I mean, I couldn't tell you how many people I knew that took off. And because possibly the people took off, number one, it had no sellers, and the market just ripped to the upside as people were like pounding the market to the upside. And then Sunday night, you know, we opened a little higher, and then here we are Monday, and the market's, you know, again, performing fairly well in the S&Ps. I mean, we're sitting here at 05, not really doing a whole lot, if I'm not mistaken. So in any event, I ran this scan for information technology in using Thinkorswim. So we go up to scan, add study filter, and you come up with a drop-down menu, once again, license study, PPS buy signal. All right? I'm not looking for sell signals because my overall market timing with the major indexes, especially the NASDAQ, suggests that we still have some more upside. So looking in there, and I find, again, when you do it pre-session, you can't throw volume up because there is no volume, and there seems to be, if I threw 200,000 and I run this scan right now, just watch what happens here. I could be wrong, but I don't think so. Nothing pops up. Nothing pops up. So what we have to do is go to 0 as the market to get a populated list because there's no volume right now. So in any event, looking at the 145 stocks is tough to filter out. And in some of the names you might come up with as you could see some of the symbols you might be familiar with, like TTWO, Take Two Interactive. So if I go over here to TTTO, and I'm going to go to toss charts, and then I'm just going to add that Take Two Interactive. Now Take Two Interactive did generate a nice little breakout buy signal. I'm going to change this, but where is the volume on that rally? I mean, that was a rally that engulfed 1, 2, 3, 4, 5, 6 days. Agreed? It engulfed literally 6 days open-close relationships. It closed, it looks deceiving, the high 64, we closed at 65, 1 penny. So we even made a new high close above a swing high by a penny. What bothers me about a name like this is that there was no volume behind it. And so when we take a look at the weekly chart, look at the rally, and you know, last week's decline had a more significant, I mean, price was not as severe of a decline as the prior week. Would you agree with that? I mean, let's face it. I mean, if the market was at 1978 and then after 5 weeks the market goes down and it goes to 1909, it's not a, you know, it's not a very significant price decline. But look at the volume on last week. I mean, one could argue, well, possibly that was capitulation, and I would suggest that no, it's just a lack of interest in this stock name. So maybe there is a little upside left to it, and if I'm going to get into a trade, and that's what I want to warn people, that this could be a tricky week in the sense that I think the indexes can move higher, but we got to find and dig down to find the best looking stocks, because people will be chasing after trash, okay? And that's what I wanted to warn everyone. I think that's where we come into. Many of you have been around. I'd love to poll the audience. I mean, how many people were here 3 weeks ago? We did a presentation, and I know I looked pretty stupid because like the next day the market went down, but I was giving analysis that suggests that we could see still higher prices in the equity markets based on the weekly charts. How many people remember that? Well, a couple people, at least 1, 2, 4, 20. All right, so we were kind of positioned for that, and we didn't get punished because we had duration. We looked for July for the move, and we picked the right sector, which was NASDAQ. So with that said, I continue to say, well, what's within the NASDAQ and what weighed on the market, and that comes down to finding out what's contained in the NASDAQ itself. And what's contained within the NASDAQ itself is biotech, some retailers, Starbucks, for example, and we had Starbucks, which I think still has a solid upside. So I want to stick to company names. And Starbucks, this, compared to Take Two Interactive, what's the difference if I've done my job, if I can teach you this stuff, right? If it's teachable and you can learn to apply it and have more confidence in it, I think you're going to find yourself a much better John Person student, okay? Bobby Coleman, fabulous. On balance, volume is rising. If the market's going down and we made a lower closing low than the prior time periods or the prior lowest close, which was over here. So actually, price, looking at this close, which was 71.12 versus 68.73. All right, so we do have a dollar amount that is significantly lower, but why is the volume based on that chart plot at that point, why is that volume higher than this chart plot? Because that sell-off was not a strong sell-off. And so now we form ourselves a quasi-doji. I mean, it's not quite a doji because it didn't give us that 8% overall open-close relationship compared to the overall range. So here we have, you know, 70.50 versus 70.29. You're virtually 21 cents between the open and close. But the fact is, we did generate a buy signal in Starbucks. And we talked about Starbucks as one of the names that has a seasonal aspect that goes into July. I don't know if they're selling Frappuccinos. I hope everyone this weekend bought their Frappuccinos. Okay? You better have bought Frappuccinos. Anyway, we talked about not just this swing high, but we talked about a daily close as the market was closing above that high, and it finally gave it to us. And even the daily volume looks strong. So it looks more supportive that this market could conform to moves going forward. Now, the funny thing is, we have several weekly high close dojis. It did not make my list this week because it wasn't quite a doji, but FFIV, first five, looking at Yelp, DH Horton, Triple D, which many of you are momentum players, know that name, 3D images, Chipotle Mexican Grill. I mean, it's a great trade stock. I hate the company. I mean, I just don't like paying $8 for a burrito with rice and beans in it. Amgen, which we talked about last week, and Alexion Pharmaceuticals. Boy, that makes sense to me because that's what might drive the NASDAQ. As far as looking at weekly low close dojis, remember we talked about how the market may have peaked out in utilities, and I think one of our students, I don't know where Heidi is. Is Heidi hiding? Heidi is, where's Heidi? Heidi didn't make it. All right, so Heidi was one that was looking at the XLU with us several weeks ago as we pointed out that this market has a tendency to peak out. And notice what we are seeing is from a relative strength perspective analysis, we are seeing that relationship occur. And I just wanted to bring that up to you as we're going to, I know it's Toss Tuesday, but I don't have this available in Toss. So bear with me a second while I go over to my RS analysis and spread on Genesis. Give it a little bit of, give it a little working session here. Because what I want to do is we got now, I mean, last week, I don't know about you, but man, it was one of the most desperately deserved, dire vacations. I don't know if it was yours truly in just 3 days of physical therapy between the back and the shoulder, and I know some of you guys have expressed to me that you know exactly what I'm going through, so it's tough, man. It really is. I mean, we've got a lot of people with other physical ailments here and other things, so trading in the market requires, I mean, it does require top physical shape and mental. You need to have a good mental framework, and that's why we start off every day with a positive thought. That's why we start off doing our homework and being prepared for the market. In this relative strength, and this looks like a lot of squiggly stuff, but let me explain what it is. And unfortunately on this chart, it's not, for whatever reason, it didn't transpose to being color coordinated. So if you would bear with me, oh mercy. It makes it easier. I'm going to project over here, so just bear with me a second. This is why I've got two login names. John, now I'm John Person and Mary Person. John Person Jr. is recording this. There's so many Johns in here. There's many persons. All right, so this should populate. Okay, perfect. All right, so this is a relative strength chart going back since April. I want to see what's been going on since May. Because the month of May, sell in May, go away. How many people actually this year went to the May Money Show? I was not in attendance this year. I was with you guys instead, which made it a little bit more productive for me. A lot more productive. How many people were at the Money Show? I guess what I'm looking for is how many people were at the Money Show and found more people bearish the market. That's what I would like, you know, because I know a lot of folks do go to the Money Show. There was a lot of people that are bearish the market. A lot of you know, concern over the U.S. equity market's valuation. I mean, you had some of the greatest, or not greatest, but you had some very recognized technicians. Even myself, John Kohner, you were at the Money Show. Did you get a sense that there were more bulls than bears at the Money Show with the people? I mean, would you mind? Did you get that did you get that impression that there was more, like more negativity, more cautious tone from speakers and etc.? It was close, 50-50. Interesting. Okay, very interesting. Maybe I'm just, I think from the technical analysis community, which was very shocking. I mean, I think, and I've been saying all along, I think we have a 2007. Remember, I'm going to repeat this to reinforce this. I think we got a 2007 market where, you know, you just want to be in the right sector, and we are seeing sector rotation. It's proved it to us time and time and time again. And that's what these two blue arrows refer to. We talked about the utilities peaking out, and boy, not only did they peak out, but that's what this strawberry color with this, as I would like to point out. Many of you can see the strawberry, and then if we take a look here, I mean, this strawberry pink is XLU, it's utilities. The strongest sector, and look what just happened in the last 2 days. Look at the outperformance in this Barney purple color. So basically you've got the